Hi, everybody. Welcome back to Ox Talks. Appreciate you being here. Thank you for supporting the channel. Please share the videos with everybody you can, and please subscribe to my channel if you haven't already subscribed. Let's obviously discuss the most important thing that happened today with economic news in the United States. And the non-farm payrolls figures were released this morning. And I'll discuss briefly the data from the CNBC article that talks about the number of jobs created. But it was more the reaction and kind of this whipsaw reaction with the stock market, with crypto markets, with gold and silver, with oil, with the bonds. I mean, everything was pump and dump back and forth all day. Long story short, the stock market closed down today. The Dow 410 points, 1%. S&P 500 down 1.73% or $94.99. And the NASDAQ closed down 2.5%, down 436. So real bloodbath in the markets today. I think those were lows of the day. So the week on a whole, this week has been really horrible for the U.S. stock market. I also saw that Bitcoin, as of just a little while ago, Bitcoin's down almost 5%, $2,500, and sitting at 53,535. Ethereum's down almost 7%, sitting at $2,200, and XRP is down almost 5%, sitting at 52 cents. So cryptos are selling off. Gold and silver also had a tough day today. I see gold, depending on whether you look at Kitco or look at CNBC, it held right around that $2,500 mark. Nothing too drastic with the metals. Also, oil sold off as well. So what happened? Well, the non-farm payrolls report today. U.S. economy created slightly fewer jobs than expected in August, reflecting a slowing labor market while also clearing the way for the Federal Reserve to lower interest rates later this month. Again, this is CNBC, okay? So if you look at different sources, they're going to have it, spinning it different ways, right? Non-farm payrolls expanded by 142,000 during the month. That was up from 89,000 in July and below 161,000 consensus forecast from Dow Jones, according to a report today from Labor Department's Bureau of Labor Statistics, right? So the jobs report did not come in hot, as many had thought it might, okay? And so you would think at first glance that would have been stock market positive. And the markets did open, I believe, up. This is at the same time, the unemployment rate ticked down to 4.2%, okay? So while the jobs came in a little bit less than expected, which was good news for the rate cutting group, then we have unemployment, which ticked down to 4.2%, if you actually believe that. Okay, labor force expanded by 120,000 for the month, helping push the jobless level down by 0.1 percentage point, though the labor force participation rate held at 62.7. So that was basically what happened with the jobs numbers. It says initially markets showed little reaction to the data, with stock futures holding negative and treasury yields also lower. While the August numbers, it says, were close to expectations, the previous 2 months saw substantial downward revisions. The BLS cut July's total by 25,000, while June fell to 118,000, and that was a downward revision of 61,000. We talk about this all the time. They initially come out with these numbers to give the markets whatever reaction the markets want to see, and then when no one's looking, a month later, 2 months later, they make these revisions downward. So again, you would have thought on balance that would have been stock market positive, but wages came in a little bit higher than expected. So Jim Cramer's out today after the close and says, from Jim Cramer, truly horrendous day. No other way to encapsulate the action. Okay, so what happened? And what happened throughout the day? A couple of Fed heads came out and were trying to jawbone this thing in one direction and the other, and there were inconsistent statements made. End of the day, some friends of mine lost a whole bunch of money in the stock market. I hope you guys are well positioned and you're hedged. You didn't go all in, this morning thinking that this is going to, go straight up in a line. So this thing is going to be rocky through the election selection process. I think everybody knows that and understands it. But here's what I think is important. The stock market, I guess other markets as well, are so beholden to the Federal Reserve. They're like a lapdog for the Federal Reserve, right? I mean, every little statement that's made, every phrase, it's all dissected, and the markets and the algorithms react one way or the other. If you're an investor in these markets, you guys comment below. Obviously, I'm not a stock market expert by any means. I'm not an economist, but it seems to be very, very difficult to pinpoint and assess risk in a market like this when it's so beholden to every single move, every single tidbit of released statements from anybody having anything to do with the Fed. So this is out of Zero Hedge. It says stocks pump and dump after Waller advocates for front-loaded rate cuts, but Tamiros intervenes to hawk things up. That's the title of the article. You guys can go check it out for yourself on Zero Hedge. It says there was a bizarre reaction to risk assets this morning after the jobs report. After first surging, everything started selling off just after the cash open, led by a huge hammer in Bitcoin as usual, just around the 10 a.m. slam. It says what spilled over into oil, and that's been selling off all morning, with some speculating that while the market got a green light for a 25 basis point rate cut, as many had wanted an even uglier jobs report, which would have prompted a 50 basis point cut on fears of imminent recession. The market wanted bad news, right? Because that would have meant greater and quicker and more steep interest rate cuts. Traders decided to push for a 50 basis point rate cut anyway. That's why the S&P, after hitting a session high, it says, of 5,530, then went straight down 100 points to 5,431 on what seemed like a familiar game of chicken with the Fed, where stocks dump unless the Fed relents to more easing. Okay, now listen to this. Then B&P futures suddenly rebounded at 11 a.m. Eastern time when Fed's Waller, a voter this year, on the committee, delivered remarks in which he said that the current batch of data no longer requires patience. It, quote, requires action, and that he would advocate to front load rate cuts if appropriate. Okay, of course, then that sent stocks cheering again, and the cavalry appeared to be showing up, and the knee-jerk was again higher in the market. And then you have Fed Governor Chris, Wall Street Journal's Nick Tamiros promptly intercepting that and writing that Fed Governor Chris Waller's speech doesn't explicitly say 25 or 50, but leans into endorsing a 25 basis point cut to start, explicitly reserving the option to go faster as appropriate if new data show more deterioration. So this guy comes out then and basically reinterprets the comments from Mr. Waller. End result, the market's pretty much sold off big time today, line straight down. It says the result of this sequence was just as bizarre as the market reaction to the jobs report. While stocks initially jumped, then immediately reversed all gains and have since sunk, dropping not just to session lows, it says, but rapidly approaching the lowest level since the early August sell-off. Interestingly enough, we're just about a month from when that sell-off occurred on August the 5th. So again, I know I'm focusing on stock market stuff today, but it ties in with the jobs report, and we all have to be watching this stuff. The fact that crypto is getting beat up so badly, you have, we know that we have everything bubble in housing, bubble in the stock market, cryptos. You could even argue metals at all-time highs. So, when are all of these bubbles going to start bursting? And that was kind of the pun on the thumbnail I put up for today's video. So, guys, I hope that you're hedged. I hope that you didn't get burned today in whatever your preferred investment mechanism is, or market, or strategy. Please, obviously a lot of people in this country, don't even have enough money to put food on the table. So they're not out gambling in the stock market and buying Bitcoin. I understand that. But don't forget, when the wealthy get stung with these market downturns, it flows down. Okay, that ball rolls downhill. They are the employers in this country. They are the ones that spend money in the economy, and this could all be coming to a very abrupt and unhappy end now. So with that being said, sorry it's kind of doom and gloom news, but it is what it is. Have a good rest of your day today. Stay healthy. God bless. I'll talk to you soon. Bye.